think where we are right now, Elijah, is on the cusp of a move up in both metals.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the top silver expert from the Morgan Report, the Silver Guru. David, thank you so much for joining us today.
Thank you, Elijah. You got to tone down my intro. You just call me David Morgan, the Morgan Report. I'd say of the last few years, there's some pretty sharp cookies out there in the space. I'm not sure I'm top billed anymore, but I guess age before beauty. So anyway, thank you. Let's carry on.
Well, you're one of the top silver experts in the industry, so we really do appreciate your time today. And we did want to discuss silver demand. Everyone's been hearing about this huge order from a billionaire in Texas that Miles Franklin processed $50 million of silver eagles, junk silver, gold American eagles. Your perspective first on this order. And, the person said, it might not be, they could have more orders coming. So what does it really take to disrupt the silver market?
Well, there's a lot of things. But buying pressure is primarily it. And the other factor that we haven't talked about much is, how much rehypothecated silver is out there. In other words, multiple ownerships on the same bar. But I don't want to go down that rabbit trail. Let's focus on the demand side and assume everything is on the up and up. So if we do that, we have basically a billion ounce a year market, about 850 from mining worldwide and about 150 million ounces from recycling. So round number is 1 billion. Sometimes it's been over that, I think, once or twice, and it's been under that the last few years, but it's a good round number. So of that, 50% is industrial. Silverware and jewelry is another 25%. So that's 75% that's just gone every year. And then about 10% right now goes to solar. So we're down to 15% is what I would call the open float, which of course is investment demand. And then of course we get into whether the amount of silver on an annual basis is in a deficit or not. In other words, there's more investment demand for silver than has been mined in that particular year. So if you look at that part of it, that is 150 million ounces, 15% of a billion, 150 million ounces. You can go back year and year. I'm doing this from memory, so you can check my silver guru status. But I'd say conservatively on a good year, you'll have 100 million ounces that come from retail alone. On a good year, you have 40 million just silver eagles, not counting the other sovereign mitts, not counting silver rounds, not counting 10-ounce bars, 100-ounce bars, kilo bars, and all the other investment demand that comes from the retail side. So if we factor in, I would say conservative 100 million ounces, that leaves about 150 million ounces to be available to, let's say, institutional or larger investors, if we put it in those terms. It doesn't really matter. It's available for anybody. But my point is, getting to your question, someone with some deep pockets that wants to buy silver, there's just really not that much there. And it would take, what is it? It'd take about $1 billion, I guess, to basically wipe out at $20 silver, that float on any given year. And there's never been there has been that kind of demand in 2020. We saw double that demand. We saw 320, I think it was, million ounces that went into the ETFs, ETPs in 2020. The largest influx of silver into investment ever from the institutional side. And on top of that, it was a good year retail. It was 200 million ounces in retail alone, not counting the bigger investors I just mentioned, 320. said 520 million ounces that were used as investment for 2020 in the silver market. We went from 18 to 28 pretty quickly. And of course, now we're back down to 20, as we all know. So my point is that if someone isn't going to just play with the ETFs and the ETPs, I'm not trying to discount them too much, but I want to discount them. Someone was to come in and play hardball and take physical metal and probably store it outside of the exchanges in a private vault, for example. It wouldn't take very much to move the silver market.
You're saying that it won't take that much to move the silver market. Do you see that happening then in the future as more investors and more very wealthy individuals are waking up to the potential for silver? Do you see that happening more in the future, that those large investors will start investing in the physical silver market?
Yes. First of all, this woman from Texas, I mean, with her ability to see what's coming and protect some of her wealth in real metal is it's a given, and many people that are of that caliber do it, but they don't really talk about it, and I commend her for being willing to let Andy and Bill Holter, and I know them both quite well actually, talk about it. So a lot of people are not leaders, or followers. And so, you'll see more and more come into it. On the institutional side, it depends. I mean, I remember early on in my speaking career being in London at one of the London shows, and one of the fund managers came up to me and basically said it was just too small a market for him to put any real money into the silver market. And he walked away. I was a little frustrated, and it was very early on in my speaking career, and I have a perfect retort after he left the table. And it's, well, it wasn't too small for Warren Buffett. Buffett bought 129 million ounces. But think about that, going to that 130 million ounces of the round number, 129.7, that Buffett bought. That is, a good retail market these days, and it's less than half of what was invested in 2020 by institutions. So, if you want another Warren Buffett, you only have to go back to 2020 and look at what went into the ETPs to get an idea of how much demand there can be in the silver market. My point is, with that anecdote, is that there's so much funny money sloshing around. It's mostly going to be retail that goes into it, because the larger institutions are going to go to gold. It's a much bigger market relative to the silver market. Gold's extremely small. You might see, like Bill Gates, he bought Pan American Silver very early on due to a fund manager that basically convinced him of the dynamics of the silver market. And there will be much enthusiasm once the run to gold starts in earnest, and a lot of it will spill over to silver. Silver will outperform, I'm convinced. It always has. I don't see the reason it wouldn't this time, especially just on the industrial side. And one more point that I've got from a premium member recently, and he said, well, your industrial argument's pretty strong, but with the contraction in the global economy that you keep talking about, isn't that going to curtail industrial demand for silver? And the answer is yes. Yes and no. It's a tough answer. Yes, and generally speaking, because there'll be less widgets built, less things made of silver. However, there's more demand on the solar side. Whether they balance out or not, I don't know. But here's the point. That will curtail copper mining, lead, zinc mining, tin, all your other base metals will not be mined as heavily as they have been in the past due to the contraction. And that's actually a bonus to silver, because 70% is a result of base metal mining. So if you factor, just for a thought experiment, I'm not saying it's going to be this hard, but let's just say that base metal mining got cut in half. What would that do to the silver supply? Well, it should be huge, because, again, the bulk of silver comes from base metal mining, not from primary silver producers. So actually a contraction in mining generally speaking, is more bullish to silver than it is any other metal. Because again, it's a byproduct metal that's 70%. If it's only 20%, wouldn't be a big deal. But since it's the lion's share of the market, it is a big deal. So I want to make that point very clear.
You mentioned that the large institutions will start moving into gold first because, that's a bigger market. But it seems like also that, when we see a move into the precious metals, maybe gold moves first, but then silver catches up, right? Because people then turn towards the more affordable alternative.
Right. I mean, the old adage of Einstein, all things are relative, right? So if you look at, these huge hedge funds or whatever, they probably won't bother with silver. But you get like a pension fund run by a bunch of teachers or, those type of groups that have several millions of dollars to deploy, they probably rush into the silver market. Hey, gold's really taken off. Silver's where the juice is. We're going to go into it. So it's relative. Depends on what you consider big money. But silver, again, such a small market, doesn't take a lot of big money to really move it. And you are going to have enthusiasm into that market. It just probably won't come from people that have $1 trillion to deploy, the amount of funding money that represents versus how small the silver market is. It's such a small percentage. Remember when Buffett bought 130 million ounces of silver, he didn't even report it in his annual report. He put it under a column called miscellaneous, because the reporting requirements were as long as it was less than 2% of the overall portfolio, he didn't really have to break it out. So he broke it out in miscellaneous. So that's just one, it's a big, Berkshire Hathaway is pretty big, but just the same, that's one entity that took an interest in silver way back when, 99, 98, 99, and took over a heck of a lot of silver off of the COMEX. Did move the market, and there you have it. So just think of another 1, 2, or 3 of those, or multiples of that. So there's a lot ahead of us that are in the precious metals camp, and unfortunately, in a way, one, it's good because it's a way to protect yourself financially. That's a given. The unfortunate part is that there will be a contraction in the overall standard of living for almost everybody else.
Now, when it comes to the impact that this will have on the average person, it seems like, as you're saying, obviously the standard of living will decrease. But by holding precious metals, do you think that's a way to preserve our standard of living? Because a lot of the wealth will be transferred to the holders of metals.
Yes and no. It will definitely be better than not having it. It depends where you are, kind of what the jurisdiction is somewhat, and what's available. If you're in a situation where there's lack of availability, it doesn't matter how much money you've got, you won't be able to purchase something that doesn't exist or cannot come into that, that port or that country or that, that place. So there is that to consider. But on balance, if you were talking about anyone in Venezuela or Turkey or some of these other failed states that have had a failed monetary system like Argentina again and again and again, they're far better off having precious metals than not. So, but is it going to allow you to keep the same lifestyle? That remains to be determined depending where you are. Some places probably better. A lot of places probably even, and some places not as well, even though you've got the money. That just isn't, you just, again, don't have the availability of, if all the restaurants are closed in town and you're used to eating out twice a week, none of the restaurants are open, you're cooking at home.
Now, I would like to switch gears a bit to the here and now, what we're seeing in the precious metal markets. It seems like we, back with silver, just a few weeks ago, we were in the 18s. Now we've seen a bit of a bounce back to the 20s, and gold is, touching $1,800 again. Your take where we are right now, and also, I guess we can also discuss the latest COT report that seems incredibly bullish right now.
Well, maybe I'll work them both in together. I think where we are right now, Elijah, is on the cusp of a move up in both metals. As you said, the Commitment Traders has been very bullish for quite some time now, and it does portend higher prices. It's just not a really good timing tool. It used to be years ago, but now you just have to see it and get all excited, but hold your excitement until the actual move. I said 1850 was probably the bottom. It looks like it probably is. And we were due a relief rally no matter what. Here it is. How much further it has to go, I'm not sure, but I do think we have more to go. It looks like the amount of gold coming off the COMEX is significant. And it looks like with the money powers that exist in the system, not only in the precious metals, but the entire system, the commodity system, the stock system, financial system, are able to keep the paper price at certain levels. And 1800 seems to be kind of the sweet spot as physical keeps coming out of the COMEX. So once that area is broken to the upside substantially and maintains it, I think we're on our way. I really look for great moves over the next 6 months. And the reason I say that is I just got done with a lecture, I think yesterday or day before. And during my research for this particular talk, I found the seasonality during mid-tier elections. And it was fascinating. The seasonality was very profound. During mid-tier elections, we saw silver or gold rather go from a low in July almost straight up into December. So every month over month, it continued to go higher and higher and higher. Does that mean that it will happen again now? And the answer is no, but the probability is there. And I believe not only with the seasonality I just told you about, but everything else that's going on, I think the run to gold, I've already stated my reputation that it's begun. It's just begun as a slow walk, and no one's really noticing yet, other than those that really can, Sherlock Holmes that can see the clues quite early. But the rest of the market doesn't see it yet, but they will.
Now, what gives you the confidence that we did see the low in silver? Because some people are saying that, we could be just looking at a dead cat bounce right now and have a greater washout later.
It's really tough. I mean, I've been excellent so far at calling tops. I've caught every one of them, but bottoms, I've not been as good. And I look at the camera in the eye and I'll say it. I mean, there was a low, I think it was 1817, several years ago. I said that was a low. It had all the classic spike low, large volume, washout, key reversal. It went to a low and changed at a higher high close that it did the day before. That's called a key reversal. Everything was there. And I was right for 14 straight months. Over a year, I was correct. But then month 15 from that call I made, it got below 18. So I'm not addicted to the being right. I try my best or do my best. The reason I think that's really it is the conditions of the world. I mean, what you visit on your show every time you do Liberty and Finance. I mean, there's a direct correlation between sound money and a sound society. And our society globally, it's not just the United States, it's in Canada, it's in everywhere. There is a moral breakdown. There is a lack of trust for government anywhere. Name anyone you want. Name France, name the UK, name Spain, name anyone. And there's a breakdown. And because of that, people seek safety and trust. And the most trusted money is precious metals. And that idea will become more pervasive. It will be everywhere at one point. And once a system does readjust, however that comes about, with the central bank digital currency or, financial technology or some combination thereof, or something I haven't thought of, there'll be an adjustment and you'll see a great shift of money or money power. Hopefully it won't stay with the elites that have it now. It will be able to shift into the people's hands. But as unlikely as that is, it's still a possibility. And with today's financial technology, it's more of a possibility than it's been in the past.
Now, I was watching one of your recent videos you put out, and it showed the title on the screen was The Great Credit Contraction, and it was an inverse pyramid that showed of assets in the world. And it showed derivatives at the top and then all these different levels. And then at the bottom is this tiny little section of gold and silver. So it's like our world, like you're saying, is there's so much distrust out there. All these assets right now are promises to pay, it seems like. And at the very, very bottom, you have what's real. Can you expand on that? And what does that mean for, if we're going to see this rush into precious metals, into safety, what does that mean for that tiny little section at the bottom of that pyramid?
Well, it means it'll explode in value. I mean, price, you could call it price, but the idea is first of all, it's called the Exter pyramid, EXTER. You can type it into Google. I actually have a copy of the original one. The one I showed on that presentation is more updated. I think it's from Trace Meyer, a friend of mine. And it's a little bit better because it's updated. The idea is liquidity. So when you've got to buy a house, you might have IBM stock, but you got to sell the stock, turn it into cash. Now you're liquid. Now you can buy the house or put the down payment on the house. You want to buy a car, you might have a mutual fund and some cash in your bank. You got to sell the mutual fund and, add it to the cash and, make the down payment on the car or buy it outright or whatever you're going to do. So liquidity means that as you are more and more uncertain about what the value is of the assets you hold, such as a real estate portfolio, stock portfolio, a bond portfolio, corporate bonds, municipal bonds, any ETFs, any financial instrument, you start to lose faith in those. People start to cash out and get to what they trust the most, and that's cash. So that's why right up from the gold tip of the pyramid is cash. And it talks about physical cash, meaning physical euro notes, British pounds, US dollars, Canadian dollars, those pieces of paper. Those are the most trusted. They're physical, tangible, I won't even call them an asset, but representation or promise to pay something. And that's what's most trusted by almost everyone because they're familiar with it. But once faith is lost in the cash, which happens at the end of these great empires, of these great monetary cycles, then the people that have moved out of all their assets and into cash, or let's say changed their portfolio, maybe from having 2 apartment complexes, they've sold them both, they have their residence and a vacation. So they've liquidated a great deal. Liquidate, again, get into liquidity, get into cash. So now they have a bunch of cash, and now they realize that it's losing value rapidly. And so they decide, what can I do? And the answer has been in the past and probably will remain so, to put it into something like gold. So there'll be more and more people seeking that asset. And it's a very small market versus the trillions of dollars. The real key is the bond market. I mean, the idea is that bonds are as good as gold. I mean, there used to be an adage, the dollar's as good as gold. And one time it was. You could exchange a U.S. dollar for gold. Of course, that ended April 15th, 1971. But the idea never left that, the U.S. dollar was, very valuable. And if it was losing value, it was losing value at a lower rate than all the other currencies, which is where we're at now. And that the debt markets of the United States were so robust and so well maintained that you were safe as safe could be if you bought into a future dollar. But of course, that's not true. In fact, bonds are really certificates of guaranteed confiscation. If you look at, you're holding a treasury or 30-year, I mean, you're getting whatever, 2-3%. And inflation's at 8.5, and this month it stayed at 8.5. Whoop-de-doo. You're losing quite a bit, especially over a 30-year time frame. So the bond market is in a precarious point. I mean, in January, it did something it hadn't done for 40 years, and that is it basically topped out and said, I'm done. So I'm bearish and have been bearish on bonds, probably way too early. But the idea that if a dollar is losing value, then any future dollar is going to be losing value. But the market hasn't adjusted to that yet. Although, if you look at our trading partners, a lot of them have already caught on to the idea that Keynesian disease is a disease, and they don't want much to do with it. So they have offed much of their treasury portfolios, short or longer term, short, mid, or long term. And that's a smart thing for them because this financial system is creeping to the end. I should say creeping, accelerating really to the end. And I don't think anyone knows. I don't really think personally that the banking elite, the Anglo-American empire, what exists out of London and controls basically everything, really has the new system at hand where they're just going to dictate this is what has to happen. Go to your local bank, sign your name, take a thumbprint, get a photograph, and you're in the new system. I don't think they've got that planned out all the way yet. And that means we're going to see some chaotic times as the transition takes place. And there's also a possibility there won't be a transition. In other words, and this is remote, but there could be a situation where, at least in certain parts of the world, where they just give up on the government power and just go back to local communities and work within their own communities to make an economy.
All right. Well, David, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where our viewers can find you online?
Yeah, please go to my main website, themorganreport.com, get on our free letter. And there's a blog there. You should pull down and look at that. I'm pretty active on Twitter. That's at SilverGuru22. I don't think you can find me by name, but you can find me at SilverGuru22 on Twitter. Pretty active on there. And just, realize that we've said many times on your show, Elijah, that there's more important things than money, but it is important.
It definitely is important, and it's important to be aware and prepared, and that's why we're here. So thank you once again, David, for joining us today, and God bless.
God bless you. Thanks, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.